Are we good? We're good? Okay. Hello, everyone. Thank you for, welcome to our live, to our Smart Moves Real Estate Live. We are the ladies of BCR. Oh, we lost somebody. Okay, I'll keep going. We are the ladies of BCRG, and you see a new face. We have a special guest here. I will introduce him in just a second. My name is Tiara DeVolco. I am the team lead in Hampton Roads. And then we have Mo, she's in DC, the DMV area, Justine in Houston, and Sierra in Richmond. There you go. I think their mics are cut off now. I'll just do the introductions. And then we have Terrell with Next Step Credit Repair. He is phenomenal. He's going to give you the best tips on credit, the do's and don'ts, where to go, what to look for, what's a good score, all of those type of things. And then at the end, we are going to announce the winner of our giveaway. So you have to stay on till the end to see if you are, if you won. And the email that you register with is where it's going to go. So make sure that you submit an accurate email address. If not, let us know, because if it's you and it's wrong, you won't get it. So we'll go ahead and get started while we have Terrell here. Terrell, can you hear me?
Can you guys hear me now?
Nah, yes.
Okay. I
Yes,
wasn't sure
there you
if I
go.
was muted or unmuted. Said the host was muted. All right, so I'll get right into it. So for the world who doesn't know me, Tiara does, but thank you, ladies of BRG, for having me on your Real Estate 101, your Smart Moves live. My name is Terrell. I own Next Step Credit Repair here in Virginia Beach. I opened up Next Step Credit Repair about 3 years ago, back in January of 2020. And I've been able to help about 604 people. At the end of this week, 608 people buy homes. So fix their credit, take it from bad all the way to great, and help them move into that one big goal of home ownership. I know everybody on this live and everybody in the world are at different places with their credit, and that's okay. I want to start off with just basic credit information, and then we'll get into some good stuff as we kind of go through this. All right. So I just want to start off by just figuring out for everybody out there, what is credit exactly? So a lot of people think that you have just this one universal credit score, or that, hey, this credit score is better than this credit score, when really you actually don't have one credit score at all. You have a bunch of different versions of your credit score. And what you have is one credit profile that gets judged a bunch of different ways by a bunch of different creditors and lenders. And depending on what you're applying for, your credit score is always going to be different. So a credit score is really just a mathematical formula that predicts kind of your credit worthiness. Most credit scores are going to run anywhere between 300 and 850 when you're talking about FICO. But when you're talking about regular like Vantage credit scores, those run anywhere between 300 and 900. You can see them as high as that. And we've got a couple of new versions of FICO and Vantage coming out that's going to run all the way up to 950. So just a quick thing, just be on the lookout for that. We have FICO 12 and FICO 11 coming out here shortly. I was at CreditCon about a month ago, which is a place where credit bureaus and FICO come and they introduce new things that are going to be coming to the world of credit. And that was, one of the big things they dropped was that you'll now have a 10-year payment history on your credit report. And they'll have two new versions that people can use to predict your credit worthiness. So obviously, the higher the credit score is, the better your chances are of getting a loan, and kind of the lower your credit score is, the lower, the chances of getting a loan. So I always like to talk about what's not credit. And one of the big things that I see out in the world is adding things to your credit that help boost your score, quote unquote. Right. And one of the biggest commercials in the world right now is Experian Boost. Most of us have the Experian app on our phone, or we look at it in some way, form, or fashion, or we check their website and they introduce this thing to help you improve your credit score. But what most people don't know is that the Experian Boost is actually not credit. any lender or a financial person that judges your credit removes anything off of your credit that's self-reported. So before they give you a score, right, they'll remove anything that's self-reported. So like if you report your utility bills, if you report your rent, if you report any type of like Netflix accounts, or you report like daily expenses, anything that Experian can give you extra points for. When you go to apply for any type of loan, they remove that stuff. And that's a lot of times where you'll see a score difference from lender to lender, and they won't show it. Whereas on an app, it'll have a different score for you. So utility bills, phone bills, Netflix accounts, Experian Boost, self-reporting your rent, those things are actually not credit. So just to be clear. And your credit report is really just a record of your past borrowing power, and it gives a lender kind of the capabilities to know whether you are lendable in the future, right? So lenders or financial people always use your past behavior to determine your future behavior. That's why it's important to always pay bills on time, keep your credit card balances low, that sort of thing. All right. Credit affects most people in a variety of ways. For everybody who's not self-employed or 1099, kind of going through corporate America, right? If you want to move up in there, they're going to do background checks on you. And if your credit is not in order, it's going to be highly unlikely you're going to be able to increase your position or your salary, because you are not, in their eyes, somebody that they can grow their company or their business with, because you're not responsible. How can I make you responsible for 100 people if you can't even be responsible with paying back $111 to T-Mobile every month, right? So, when they do those background checks, generally the people who get those biggest jobs are the people who have their finances in order, and credit is one of the biggest things that you'll find in corporate America that affects you. What most people also don't know is credit affects your health insurance, life insurance, and your car insurance. Anything that accepts your social security number, whether they run a soft pull or whether they run a hard pull, that affects your rates. I want to say about 6 months ago, insurance companies did a big spike in rates where they went up on a lot of people's insurance. And most people didn't understand why, right? Cars were still the same, coverages were still the same, nothing changed. What changed is that they did a background check on every single last person in their database, and they made some adjustments and spiked the rates for people who had bad credit and didn't spike the rates for people who had good credit. My insurance actually went down $60, and I have 4 beautiful brand new 2022 cars, and I pay $87 a month for full coverage on all of them, right? And it's just because my credit's in stellar shape, and plus I've had Geico for like 10 years, so maybe that helped a little bit keep me under that $100 mark, but it affects that. So keep that in mind. Another thing I wanted to talk to you guys about today is the perfect credit score, or the 800 thing, or whatever that is that people have in their mind that they set out for this to be a goal. So what most people don't know is that there is no difference between a 720 credit score and an 850 credit score. Literally no difference. They both fall in the excellent category on the credit scale, right? So I always tell my clients or anybody else, once you get to a 720, it's about perfecting the profile behind it so you can get larger limits, right? So you can get lower interest rates. And then it's about improving your income, right? Because the only thing that's going to separate the person with the 820 and the person with the 720 is how much credit somebody else has already given them, right? And how much money you actually have, right? So when they're looking at income, right, always put in the total amount of income that you have in your house. I don't care if it's your mom, your grandma, your auntie, your uncle. If they live in your house, put in their income when you fill out a credit application. So that's one of the things that most people don't do. I put in my wife's income every time I fill out a credit application, and it always gets me a larger limit than if I put in my own by myself, right? Because she has a job, she has an income. We're going to take that $60,000 a year and we're going to put it with my 250, and I'm going to be up to 300 and something, because it asks for the whole house income, annual household income. So always put in everybody's income that's in your house. That will help you get larger credit limits on your credit cards if you do have them, or if that's something that you are looking for. Also, having good credit allows you to travel for free. I went to New Orleans for free. We're flying to Disney for free. We'll be flying to Texas for free. We'll be flying to Mexico for free. So, getting higher limit credit cards allows you to have more rewards. So American Express is one of my favorite. Chase is one of my favorite. Somebody says they can't hear anybody on Facebook. I'm not sure what that's about, but I shall keep going. But the better your credit is, the larger limits and the more rewards and points and transfer portals you'll have access to, and statement credits, things of that nature. So, if your credit is sitting anywhere between 680 and under, you definitely want to be looking at, buying your credit report. That's a huge thing that not enough people do. Is that they don't buy their credit report, and you need to every single month. I don't care if you buy it from My FICO. I don't care if you buy it from Experian. Experian's not at the top of my list, but My FICO is. But it's about $50 a month to get it, and you should buy the whole entire thing. Oh, gotcha. And then I want to talk about, just the credit pie. Oh, somebody had a question. I'll stop.
Yes, I did. You talking about the traveling and all that, it made me think of something that I've heard. I heard another credit guru say, like, she doesn't use her debit card. She uses her credit card for everything and then pays it off. Like, she uses her credit card as her debit card essentially, and that's how she, like, just got her credit right and then racked up all those points, and that's how she's able to travel for free and all of the things that come with that. Is that something that you do or have heard of, or is that right?
That's correct. I don't have a debit card. I haven't had one since 2019. I don't have a bank account either. I haven't had one since 2019. So I'm a high yield savings kind of guy. So I like interest. I don't like putting my money in places that don't pay me, right? So I use an American Express high yield savings. I also use an index universal life insurance policy. I have 11 of those. So I put my money in places that it's going to grow. With the bank, every $250,000 that you put in there, you get 1/2 a cent. 1/2 of a cent. Good job. You really changed your money by putting all your money in a bank that most of them only insure up to 250,000, right? Up to is the key word, right? So sometimes they don't insure it all the way up to that. So for me, I just put it in different places. I closed out my bank account. I actually went to a conference in DC where I heard that from a guy, and that was back in 2017. And I've been, credit cards ever since. Just because there's no benefit or there's no reward, Tierra, out of using your debit card. Tell me what's the benefit, and I'll show you a lot. Right? If you take $15,000 to the bank today, right now, right? And there's a nice video of Soulja Boy on YouTube. He took like $150,000 to the bank, and then he couldn't get it out 5 minutes later. They wouldn't give it to him. You know why? They spent the money literally in 5 minutes, all of it. You want to know what they spent it on? Life insurance policies. They put it all in the life insurance policies. Bank of America puts $1.3 billion a day into it. $1.3 billion, because it's the safest way to kind of save your money, where it's going to gain a crazy amount of interest. So your return is going to be fabulous, right? And you're not going to lose money in stocks and in the market and kind of playing that game. So she's right, where you should be using your credit cards as your everything. She's also wrong, and everybody can't do it. This ain't meant for everybody. This is meant for people who are financially disciplined, right? Because you have to have a lot of cash flow coming in order to achieve what she's trying to achieve, right? You can't do it on $300 credit cards, right? It's not enough, right? So you would need to have, I have $2.8 million in credit cards. So, you would have to have at least 60,000, I would say, to kind of make what works, what she's saying work out. So I always say, start small, find a bill every month that you can put on your credit card. Once you get comfortable with that bill and you get comfortable with that whole bill coming out of your bank account whenever it's due, if you're going to have a bank account or high yield savings, whatever you decide, right? Then move on to another bill, right? And then move on to another bill. But you got to understand, you can't choose both debit and credit. You just have to choose one or the other. So stay in your lane, whatever lane you decide to stay in is what, I would say to that statement. But yeah, you can absolutely grow your credit enough to where you can, travel for free, where you can do a lot of free stuff. And it's just about the transfer portals that you own and the type of credit cards that you get. You got to have high yield limit credit cards. And if you don't, that stuff is just not going to work, right? So I don't believe it's for everybody. I believe it's for people who are financially stable, financially able, and for people who grow into that. But you should not be using your debit card. You should be using your credit card for everything. Funny, quick story, and then I'm going to move on. Somebody spent $3,000 on my Navy Federal credit card yesterday. I don't know when it happened. I have no idea, right? Navy Federal gave me all my $3,000 back and sent me a new card and gave me a digital card all in 38 seconds, right? If that was a debit transaction, they would have investigated for 7 days and got back with me in 2 weeks and said, oh, well, we decided it was you. I took a flight on American Airlines and I got stuck in Dallas for 4 days. And American Airlines didn't want to refund anybody their money. I called Navy Federal. I told them what happened. They gave me back my ticket plus extra for the flight being canceled, right? So those are just some of the protections that you have under credit that you just don't have under debit. Hope that answers your question. And then some. So I want to talk about these credit-like components and how your credit algorithm or mathematical problem kind of works. And if you're here, you might want to write this down. But your payment history is the biggest part of your credit profile, okay? So it's 192.5 points of your overall credit score. So the way you pay your bills back is 192.5 points of your overall credit score, okay? And then you're going to have your debt ratio. On some apps, you'll see it say credit utilization, the amount of credit that you're using versus the amount of limits that you have. That number, most people consider it to be 30% in the world, right? It shouldn't be over 3%. No, you can ask your questions, Mo. If you got a question, unmute, ask it. But those points are equivalent to 162.5 points. I think you got to ask to be unmuted by the host.
Yeah, Bree has us muted, so she has to unmute.
Oh no, I can. Can you?
Oh, there you go.
Oh, okay. Yeah, I had a question about the bankruptcy. Do you recommend folks that are in the process of buying a home but have a lot of debt? Do you recommend that they, depending on how much debt they have, do you recommend that they file bankruptcy or try to work on repairing their credit?
I recommend that they work on repairing their credit. And here's why. I don't like bankruptcy, right? Number one, it sets your life back too far, right? Most bankruptcies outside of a Chapter 13 are going to stay on your credit for 10 years. The Chapter 13 is going to stay on there for 7 years because that's the repayment. You're essentially just repaying back all your debt that you have, right? The one instance, and I recommend bankruptcy, is when you are being sued for umpteen amount of money that you know you can't afford to pay back, and your check or your income is being garnished at more than a level in which you can afford, right? Other than that, right, you can settle out most of your debt. If you owe $30,000 across your credit report, you could probably settle the whole entire thing for 10, right? It's most collection agencies, they've already bought the debt for pennies on a dollar, number one, right? The original creditor already charged it off, number two. Number three, they just trying to get a little something back out of you, right? So if you owe them 300, hey, I got 120 right now, today. Are you cool with 120? Because if you are, I can make a payment right now. If you're not cool with 120, call me back when you are, right? Remember, they have have a job to do, and that is to collect debt, right? If they don't, they're going to get fired. And we all know, I don't know if you guys ever worked in debt collections. I did. Man, it is a high stress environment. Let me tell you, if you ain't collecting no money, they're always talking about firing you. So I used to give crazy discounts. Oh, you got 80? Yeah, no, I'll take 80. That's cool. I'll take 80, no problem. And I'll take whatever they got. I don't even want to counter or nothing because I'm just trying to get my money up on the whiteboard, right? Whoever collects the most debt gets a bonus. Very simple. So I would say, I don't recommend bankruptcy. Just set your life back too far. And you're going to spend too much time rebuilding it. It's going to be a lot of low credit score type situation, low limit credit type situation. So I would say just work on, repairing your credit, work on paying down your debt, work on settling some of it out. I know on the internet, they say, don't pay your collections. Oh my God, it's going to reset.
Right, they do say that.
It's going to do this, it's going to do that. Would you rather go to court? You get to choose, right? Would you like something like I owed my doctor's office like $68 from like 2007. They sued me in March of 2022 for almost $7,000, and they won. Now, when we left the courthouse, we came to a nice agreement at 3, right? But they won. I only owed them $68, and I still go there to this day, every Friday. Wow. I didn't know I owed them $68. I would have paid the $68. You understand what I'm saying? Right. So most debt collectors who have debt, right, you can look them up online and you can look up their licensing. If their licenses is tight in your state, they can take you to court any minute, right? Because they have all the original information and they bought the debt legally. They obtained it legally. They have your signature. They have all your transactions. They have your transaction history. They have every video on every amount of money that you spent on everything at every single store. So don't think that you're going to be able to FCRA your way out of this or find some little letter online from Google that then got sent 1,009 times. It ain't going to work, right? Just settle it out. Move on with your life. You'll be much better off.
Gotcha. Thank you for that.
Grab that bankruptcy. If you get sued, grab that bankruptcy.
Right.
So I'll go back into this thing with the credit score components. I think we left off at the debt ratio and or the credit utilization, which is 162.5 points of your overall score. So try not to use more than 1 to 3% of your credit utilization. 1 to 3% is what you should keep it at every statement date, right? If you want to get real fancy, okay, you can spend all of the credit that you have every month, and you can pay it 3 days before your statement date each month. If you ever want to know your statement date is, open up your Capital One app, Discover, American Express, whatever it is, open it up, go down to your statements, look in the upper left-hand corner or the upper right-hand corner. It's going to say statement closing date. So if that date is the 24th of each month, make sure your balance is paid in full by the 19th of each month. And then don't use the card again until the 27th. So for 6 to 7 days out of the month, just don't use your card during that period, okay? And then after that, go crazy. I don't care. Do whatever you want to do. So long as you can pay it back in full, just don't spend more than what you have. What this allows the scoring model to do is it recognizes patterns. So it's always going to keep your credit score at an anticipation score, is what FICO called it, right? Meaning it recognizes that you always keep a zero balance on your card, but your card won't close because you're using it. So the credit card company sees that you're using it. The credit bureau see that you're keeping a zero balance. So your credit score is always staying the same or going north, but the credit card company is always giving you higher limits. It's the way that I grew my credit limit in 1.5 years. So 18 months ago, I had a $274 and I had a $200 credit card. I messed up my credit, jacked it all up, right? And went back into it. And in 2 years, I've grown it to over almost $3 million in credit cards. So you can do exactly like that, but you have to be dedicated to that process if you're going to do it like that. But that's a nice little trick that you can use to kind of, boost your score really, really quick. And then, you have different types of credit that you want to have on your credit report. Don't go out and get all of the same thing because that accounts for 55 points. Try and have different types of credit on your credit report: revolving, secured, unsecured, lines of credit, personal loans, mortgages, all that good stuff. And then try not to run your credit more than twice a year. right? So never more than 4 times in 24 months. Each time you go over 4, you'll lose 3 to 6 points for every hard inquiry that you create after that, okay? So make sure that you run your credit once every 6 months, because credit inquiries, depending on the company, will fall off every 18 to 24 months. So by the time you get to 18 and 24, the other 2 will be falling off, right? So you'll never be walking around with more than 4. You can keep those easy 55 points all the time, all right? Just real quick, some kind of do's and don'ts. Don't close out your old credit cards. If you have it and you don't like using it, just don't use it. Let the company do it. If you close it out early, it is going to hurt your credit score. If you pay off your car early, it's going to hurt your credit score. If you pay off your house early, it's going to hurt your credit score, right? Because the account type, right, is anticipating a certain amount of months on your credit report, right? It's made up of data points. So when you go close that out and it's expecting 72 payments and it gets 71 and it says account closed by consumer, credit score is going in the toilet. Quick, fast, and in a hurry, because they gave you those points based on a 72-month payment that you were going to be making. Not 71, not 69, not 38, 72 or 40 or whatever it is. So make sure that you always do that. Don't close out the old credit cards. Don't worry about your credit score being different at all 3 credit bureaus. That's because relationships. Creditors have to pay to report to the credit bureaus. That's why they're a billion-dollar industry. Not every creditor wants to pay the credit bureaus to report something on your credit report. So it's important that when you go and you obtain credit, you ask them, do you report to all 3 of the major credit bureaus? If they say yes, you're all good to go. If they say no, we only report to 1 or 2, that's not a card or a financial obligation that you want to make to that company, because it's going to mess up your credit algorithm, okay? And then you're going to find yourself having different scores with different credit bureaus. Checking your own credit really doesn't hurt you. Check it anywhere you like. Just if a lender or a loan company kind of helps you out. And then I'll be real quick with this other stuff. Hold on, give me a second. I opened up the wrong thing. I want to touch on just where you can monitor your credit at. So just some stuff for me. I would say my FICO is number 1 on my list where you monitor your credit at. So that's at the top of my list. If you want to monitor your credit right, my FICO is it. My Score IQ, that's a pretty good one as well. It gives you all 12 versions of your credit score, plus it gives you your Vantage scores as well. So that one's really good. My FICO just gives you your mortgage scores, which most people on here or most people who looking to work with you guys, they need their mortgage scores. So my FICO would be that. And then I use Smart Credit personally because I can see the whole entire credit profile. So I can see all 42 data points, and then they'll line them up next to each other. So it's really good to look at to find out if you have mistakes on your credit or not. Couple apps I don't recommend: CreditWise, Credit Sesame, Credit Karma, Experian, your banking app. All of those, trash. Throw them in the trash. They suck. They're never going to be good. I don't care how hard you try to make them good. I don't care what that score says up there. Nobody's going to use it. Okay, so just move on with your life. And then just really creating a lendable profile for yourself looks like this: 5 to 7 open positive lines of credit. Write this down if you haven't, right? Less than 2 to 4 hard inquiries in the last 24 months. Credit utilization at 1 to 3%. Length of credit history at a minimum of 3 years. If you don't have a minimum of 3 years, go find somebody in your family who has 3 years or more of credit history that can add you as an authorized user to their account to make your oldest line of credit their line of credit, okay? And then have at least 5 different types of credit on your credit report. In Virginia and in Washington, D.C., you can take out a $500 personal loan. That's the minimum, right? That'll keep your payments at like $14 a month or something like that. So get a personal loan. You can have a secured credit card. You can have an unsecured credit card. You can have a line of credit, and then you can have a revolving line of credit. So those things, or you can have an auto loan, or you can have a mortgage, right? So there are different options. But if you want to take the 55 easy points into your score, right, have some different types of credit on your report. Make sure whenever you're viewing it, it has 100% on-time payment history. Because remember earlier we talked about 192.5 points. So if we take that away from 850, that means the maximum amount of score that you'll be able to achieve is a 660, right? Which on any scale is considered fair credit. It's not even considered good credit. It's actually closer to the 620 bad credit than what it is to the 720 excellent credit. Does that make sense? So, that payment history's got to be on point, and then no negative or derogatory items, on your credit profile if you can help it, right? And if there is some and they're unpaid, get them paid, man. Pay back the debts that you owe, right? This world has enough bad debt. Don't make yours it too. You never know who you're going to need down the line, is what I always recommend to my clients. Just because I or anybody else remove something off of your credit report, or even yourself, it does not absolve you from your legal obligation to pay it back, okay? The reason why Navy Federal does not accept people after bankruptcy is because they still owe them money. Just because they removed it off of your credit report and filed it off in the bankruptcy don't mean that they took it out of their system. Nah, big dog, I still want my money. You owe me $15,000. So I want my money back. So they don't give accounts after you file bankruptcy with their debts on it. So you just want to, try and make sure that you just kind of paying back, the people that you owe if you can stand it. If you can't stand it and you can't afford it, well, then I tell my clients, you can't give what you don't have. That's it. Can't give what you don't have, but you can't go back to Capital One. Sorry. You're going to have to find somebody else to give you a credit card. And then just some easy ways to build credit for our teenagers, 18, 19, 20, right? You can literally take their credit profile from 0 to 800 in 22 days, right? 22 days is all you need. There are some credit building accounts out there that I recommend. One of them is Kickoff. Kickoff is an online credit building store, right? That will give you a $2,500 and or $5,000 line of credit. Place it on your credit report for $20 a month in savings. So what your lender will see is a $5,000 line of credit or $2,500, whichever one you choose, right, on your credit report. And we're like, dang, okay, she doing all right. Okay, sis, I see you. They don't see nothing except the line. It has a zero balance on it. They're going to take $20 or $50 or whatever out of your bank account every month and put it into a savings for you for 12 months. At the end of the 12 months, just withdraw your $360 or your $600 and whatever dollars out of it, and they'll put it right back in your bank account, but you'll still have the line. If you want to get real fancy, they got a second one you can get for $10 a month that'll give you an extra $1,000. So now you got $6,000 of available credit on your credit report. That's just one, right? You can add on another one. Most of us have heard of Self. I do Self personally every single year for my kids. I save $1,500 a year for each one of my kids. I have 2 accounts with them, and I do the $1,500 a year one. I take the $1,500 at the end of the year and I put it into the Roth IRAs for both of them, right? And we're having another baby, and I just started the $50 a week for him, right? So this is the way you can easily save money without saving money. You can spend all your money, and they can save it for you if you like. But Self Lender has a couple of different plans. They have one as low as $520, one as big as $1,500. We could just take the low one and say now you have $6,520 on your credit report. They'll take out $25 a month out of your bank account and put it into a savings. At the end of it, just put it back into your bank account and start another one. You can go over and over and over and over again. You can also refer people to you, refer people to them, and they'll pay you $15 per referral. Just keep in mind, you want to make some extra money on the side. Just saying. And then also there's Covo Credit, who can give you $2,000 for $10 a month. And there's also Credit Strong, who'll give you $10,000 for $150 a month. This goes really good into what other lenders see and what they will give you. So if you got $16,000, $17,000 worth of available credit on your credit report, and then you go apply for the Capital One card, right? They're probably going to give you a $10,000 credit limit right out the gate. As an 18-year-old, I did it for my sister. She turned 18, probably like a year ago. She has 5 beautiful credit cards and already $60,000 in available credit. She's 18. Literally, she's 18. So, you can build it really, really fast. We started with all the builder accounts, got her a small Capital One card. They gave her 10 bands right out the gate. 6 months later, we applied the 6-month rule, right? We did 4 American Expresses at the same time. If you have really good credit, pull up 4 browsers at the same time. Go on American Express. Go on American Express's website, right? Enter all your information in and press submit all at the same time, okay? And you can get 4 credit cards with 1 hard inquiry. Just saying. So if your credit's really good, right, and you want to play that game, you can. And then because they pull the same way, right, you can get 4. Go back in and then go to the Delta website and get you an American Express Delta card, and they'll use the same credit report that they use from the other 4. So you can really get 5 if you like. Just saying. That's how I got my 4 at the same time. But that's just some good stuff for you. For all my disputing people out there, this is the last thing I'm going to say, and I'm going to get out you guys' hair, but I'm going to stay for the whole thing because I probably have some questions too. Please don't dispute online. Please don't dispute through Experian. Please don't dispute through Credit Karma. If you are going to make a dispute on your credit report, just do it in writing, right? Do it in writing, okay? When you do it online, you give up something called your consumer protection rights. What those rights allow you to do is what those rights allow you to have is a proper and thorough investigation from the credit bureaus to the creditor. So if there's something on your credit report that just doesn't seem right and you dispute it online, they actually don't have to dispute it for you. They don't have to do anything. They can just press verified and that's it, and that's the end, and you can never come back and dispute it again because you gave up your consumer protection rights. So that little disclosure on Credit Karma and Experian and the Equifax website with your consumer protection rights, when you hit OK or accept, you've given them up. So they don't have to do anything for you from that point forward. So just saying, if you're going to be working on your own credit and you're not going to be using any professional help or guidance, just stay off of TikTok, stay off of Instagram. Those things don't work. Trust me. I have all the letters. Okay. Tiara knows. She asked me for a letter. She said, this doesn't look like the one I got because it's not going to be the same, right? When you get it off of online and somebody's selling it to you, they probably got it off of Google and just jazzed it up with their logo, right? So do it the right way, write it in, say what you need to say. The computer can read your stuff, okay? That's about it for me, my people.
That was great. Okay, so one, I have a few things. One, the letter was not for me. It was for a client.
I know. For a client.
I work hard to keep myself in order. So
yeah, I keep it in order.
Oh goodness. And I do have a question. So our viewers and even our agents are in different areas. So are you licensed to help our fellow people in Texas?
48 states. 48 states.
And Texas is one of them.
Texas is one of them. I don't do any business in Georgia or California. Don't talk to me. I ain't trying to do it. I don't want that type of life.
Got it.
And it's illegal in Georgia. Right?
What is?
It's credit repair is illegal in the state of Georgia. I got a fine for $5,000. I was helping this girl. I didn't know at this point a couple of years ago. And they sent me a letter from the Attorney General's office saying I had sent the letter on behalf of somebody who lives in the state of Georgia. They fined me $5,000. It's not a fun place to be. So, credit repair is absolutely illegal in Georgia. I don't play those games unless you have an MLS or you're a nonprofit. That's the only way you can do credit repair in Georgia. California is just, you need $100,000 cash. So, yeah, I ain't got that type
of less. Yeah,
so,
say less.
Just to do one.
Where can they reach you at? What's your contact information so everybody who is on can reach you?
Yeah, you guys can always go to our website. It's nextstepcreditrepair.com. You can always follow me on Facebook, Terrell Credit God Good on Facebook. You can add me too. I'll get around to it. But Instagram, Rel the Credit Guy on Instagram. Even though I don't run my own Instagram, I just want to say that up front. So if you get a weird message about booking an appointment, it's because I don't run it. But I'm also on TikTok at the Credit Guy on TikTok. So you can find me on those places, but mostly on Facebook.
Okay, cool. Do you ladies have any questions?
Yes. One more question. So what accounts or cards do you recommend people to open up that have a low credit score already? Like not the ones that's 18, 19, don't have any accounts, like the ones that
rebuilding.
Yes. So what accounts do you recommend that they open that they can possibly qualify for?
Credit building accounts. Kickoff,
Okay.
Covo Credit, Credit Strong, Self, and any type of secured credit card. So if you can't get approved at your bank, creditbuildercard.com does a secured credit card for you, $200, and they don't even use a hard inquiry. They just give it to you. It's through First Premier or First Progress, one or the other. I used to have a partnership with them. I don't anymore because I have a partnership with Amex and Chase now. So they had me sever the partnership with the other people. So I couldn't keep it, but they have a fantastic secured credit card that reports 3 times a month. So that's pretty good.
Yep. Thank you.
Or, if they go to their bank too and they can get approved for a secured credit card, I always say building a relationship with your bank is always good too. So if they can stand it, get one through their bank. If they can't, well then, build it through secured building loans like the Self Kickoff, Covo Credit, Credit Strong, that sort of thing.
Justine, you have any questions?
You're muted.
Oh,
There you go.
can you hear me now?
Yep.
Okay. Do you have any tips about for building business credit?
Yes, I used to do business credit and business funding. Used to. I stopped like 6 months ago. I didn't love it. But so structure is really important when we're talking about business credit and business funding for people who have businesses, right? Make sure you're not in a high risk industry like credit repair, like real estate, like home improvement. If you are in some type of industry like that, don't name your company Next Step Credit Repair. Valuable lesson I learned. Don't name it anything financial. Don't name it anything involving capital, right? It's going to be very difficult for you to obtain business credit and business funding because they mark you in a high risk industry. So try and come up with something unique. Try and come up with something that doesn't involve a financial name, and you'll get a lot of funding for your business. Also, make sure you have a professional email. Don't be rolling around like Terrell@gmail.com, right? Put info@brodycapitalgroup.com or, just right? So make sure that's rocking and rolling. Make sure all your social medias are up for your business and are getting posted on daily, right? Business funding companies do check that to see if you're an active company. So that's another huge thing. Make sure you have a business phone number that's not your cell phone number. When they call it or when they research it, it may very well pop up as Verizon cell phone number. Can't have that. Got to pop up as your business name, right? So make sure that the phone number that you're getting, you get a good one. I use call8.com. It's KALL, the number 8.com. They give you a business phone number, an 800, or you can have a regular area code. The 800 one is $5. The regular area code one is $10 a month. It has text messages, it gets links, it gets PIN numbers, everything. You put it right on your phone and you can forward it to your phone. So now when somebody calls, right, and they'll even record a voice message for you. Excuse me, but I have a lady on my voicemail that's definitely not me or nobody who works here, right? But when business funding people call it to just get forward directly to your voicemail, they hear that and they go, man, Next Step Credit Repair got to be a real company, man, right? But that's what you want. And then, get a virtual address at somewhere like Regis or Gather or something like that, where, you have some type of office situation, at least an office address. And then also list your business with 411. I know it's kind of old school, but when they go doing the research and funding, they're going to search 411 to see if you're listed. It's free to list your business up there. Grab yourself a My Google Business page if you haven't. Just set it up so that it's up, right? Grab yourself a Yelp page, set it up so that it's up. Don't nobody got to leave nothing up there. It just has to be working. Again, this is a part of your business identity. So structure is number one, and then, just doing some of those things. And then number two, when you're building it, you can build it while you're working on your own credit because you can do something called Net 7 accounts. net 30 accounts, net 60, and net 90 accounts. What these accounts basically do is allow you to order something from them and then pay it back 7 days, 30 days, 60 days, or 90 days, and then they'll report it to your business credit profile, right? But if your credit's already good, right, you can do something called a PG, a personal guarantor or a personal guarantee to your business. I do all my cards like that. I do not let my business stand on its own 2 feet. I do personal guarantees because I get higher limits, right? We just got a BMW M7, $190,000, right? If I was going to do it in my business, my pay is going to be $2,200 a month. I PG'd it, $957. There you go, right? So if you think about, the difference in, when your business stands on its own or when you guarantee it if you have good credit, that would be another thing, that I would say is, you can start PGing some of those business credit cards, some really good ones. Chase has a really good business credit card selection. American Express, obviously, they have a really good business credit card selection. Wells Fargo has a really good business credit card selection. So does Bank of America. I highly recommend you have at least 3 business accounts with different banks. So I'm just saying, that would be something that I would highly recommend as far as business funding. And then just maintaining it and looking at it. Go on nav.com, that's nav.com. Sign yourself up with a $40 account. It'll monitor all 4 of your major business credit profiles. That's Small Business Experian, that's DMB, which is Duns and Bradstreet, and then that is Small Business FICO and Small Business Equifax, right? So that would be something that you can do. And then also Credit Strong has a business side too, that you can build your business credit with those guys through another savings, like I talked about with building your own personal credit. So that's another really, really good one. I know that was a lot, but.
No, that was a lot of great information. Thank you. Okay.
I don't want to go after you. Like, who cares what I have to say after all
Right.
of what you just said? It was fabulous. I mean, we're almost out of we're almost at our time. So I mean, we can just keep with what we're doing, keep with this conversation.
I'm sorry, y'all.
No, this was great. We've been
Credit's
getting
a lot.
on ourselves, so to have
I
an
learned a
expert
lot.
come in is great.
Credit has a lot too many plot twists and turns, and it's a lot going on.
Yeah.
Short
I
change.
feel like whenever I go do something, I need you with me. Like,
Yeah.
I'm
got you.
gonna go get the car. I need you to come with me.
Just let me know. I'm gonna rock and roll with you. Oh, car dealerships. When you go car shopping, make sure that you check your credit before and ask them where they're pulling your credit from, so you can get a copy of your report first and you can give it to them, right? So that way they can tell you what lender is going to approve you and what lender is going to turn you down. So they don't have to put you through their automated system. So when a car company puts you through their automated approval system, it's eOscar, so it's automated. So every creditor that they have in the system, they send off a credit application to automatically. And you'll see inquiries start popping up all over your credit report. You're still getting approval or denial letters 2 months later after you've already bought your car, right? And there's 50 or 60 hard inquiries on your credit report. And they say, well, it only counts as 1. Really, big dog? Nah, it doesn't, right? To another car dealership, it counts as 1. To another creditor, it counts as however many it is. So if you went to another car dealership, they would only count that as 1, right? If you went to Capital One to get a credit card, they would say that you had too many inquiries in the last 12 months, even though you only ran it with the 1 car dealership. So you want to make sure that you always ask what type of credit report they're pulling and where they're pulling it from. So they'll say, hey, we're pulling an Experian car score, or we're pulling a Vantage score, we're pulling a FICO car score, or whatever, right? And you can go on, My FICO or My Score IQ or Smart Credit, whatever you decide to use, and pull that up and show them, hey, listen, I got a 748. Where do you think I'm going to have the best approval at? Because BMW wanted to run me through run me through BMW Finance. Appreciate it, big dog. We ain't doing that. He's like, I'm just trying to get you the best rate. I don't need the best rate. No, thank you. I don't need the best rate. I'm good. BMW Finance has the best rate. It's through JP Morgan Chase. They have the best rate. You're not going to find a better rate than the bank. So you just want to get the best rate for you, not for me. So just quick little tip for you there if you're trying to buy a car.
I bet when you go to those places, they can't stand you.
No, they don't like me very much.
Because you go in and you know what you're talking about, and they can't just tell you anything. So that's great. That's the importance of education, whether it's with credit, real estate, whatever it is. Knowing, so when you walk in, you can't be, bamboozled by whatever they're trying to tell you. That's excellent, and it makes sense because they will, like I had my first car when I was like 18, 19, and I mean I didn't think about it then, but now that you're saying it, it's bringing me back. They do run it through all those different places, and they tell you, So yeah, that does make sense. Wow, and it could be a lot on your credit. Wow. Okay. Well, we can go ahead and wrap up. If do you ladies have anything else, or I don't want to rush anybody.
No.
No, that was a lot.
Yeah, that was some good information.
A lot of good information.
Yes, and please feel free to connect with him outside. I mean, everybody, y'all, the people who are listening, follow him on all platforms. Connect with him. So he's amazing, as you can see. I mean, I know I hyped him up, but as you can see for yourself, he's just the best source for all this information. Can you hear me? Okay, so I'm going to go ahead and announce the winner. I hope she's still in here. The winner for our giveaway, I don't want to forget. It is Brandy Boyd. So Brandy, if you are still here, yes, congrats.
Congratulations.
If you are still here, be on the lookout for an email from us. So we will email you just to verify that it's you and that's the correct email. We don't want to send it to the wrong person. So answer back to the email, and then we'll send it to you. So it's Brandy Boyd. And yeah, this was really, really good. I definitely enjoy having somebody else, come on. And speak. Credit is something that we're asked about all the time. And I don't know about y'all, but I stay in my lane. So this is not my thing. So, definitely having an expert to come on and to reference to, it's just great. So I thoroughly enjoyed this. Thank you again for coming on and giving us your time tonight.
Thank you.
Yes. Well, if that is all, I want to thank everybody for listening, for joining in with us. I don't know if Bree, if you can put our Instagram tags on here or our information, just because we are in different areas. If you're listening, look in the chat and look for our Instagram tags and our info. Follow us on all platforms. We will be having another live next month. We do these once a month, so we will start marketing and putting it out there for the date. And we will have another guest speaker come in. So yeah, thank you again. I hope you enjoyed it. And if that is all, good night.
Good night, everyone. Thank you for coming.
Yes, thank you. I hope to see y'all on the next one.